Welcome to another stage analysis video. It's Wednesday the 7th of June 2023. I'm going to start off today's video just going through some of the major indexes on the daily charts to see, and some of the intraday timeframes as well, show what's been going on this week. So I think it's obviously some interesting price action going on with the rotation towards the small caps. And some of even the S&P 500, there's rotation within the S&P 500 itself. So looking at the S&P 500 here, we can see obviously it had a minus 0.38% day, but looking to the equal weight, it was actually up 0.72% and has now moved above its 180R level for the last couple of days now. And within the last 4 days, it's obviously been above and holding above that with just that one small pullback before returning back above it again. So we're in a potential short-term uptrend in the S&P 500 equal weighted chart. You can see that with the percentage of stocks above their 200-day moving average starting to broaden out above the 50% level. We've got 57.4% now above their 200-day moving average. So we're starting to move towards more bullish territory, as when we move above the 60% level generally and hold above that level. So in this upper range here, we tend to be more likely to be in a more stage 2 type environment. So as you can see, we got above that level through the latter part of January into the early February, where we started to break out into early stage 2 and then rolled over again. So we go back to the normal weighted, the cap weighted chart here. We've got, still above the 180R level on this chart. So you can see we are still in what we call a short-term uptrend. So I define a short-term uptrend with the counter channels here as above the plus 180R level. So you can see the majority of the price action, when it's holding above that, tends to be in a short-term uptrend. So we moved out from a choppy environment and we've started to move above that. So it is currently holding above for the last 4 sessions, although we've had obviously 3 days of fairly tight action here. But as I said, the percentage of stocks above their various moving averages, the 20-day moving average shown at the bottom of this chart, is also broadening out. So we've now got 73.8% of the S&P 500 stocks above their short-term 20-day EMA. So roughly a month. I prefer to use a 21-day as on the chart here, because obviously that breaks down better into a year, because obviously 252 trading days in a year divided into 12 is 21. So that's a better measure in my. But the 20-day EMA is what we've got in stock charts, so that will do. It gives a very similar data point to the 21-day moving average. There's not a lot of difference in that. So as I said, still in a short-term uptrend, still making an initial stage 2 breakout attempt at this at the moment. So going back to the equal weight here, we're still within the broader stage 1 structure here. So we'll quickly drop this to a weekly chart, so you can see that we're still within this broader structure, multiple levels under here. You can obviously draw lines across all of these various levels that have been tested, and it's underneath all of those. So it's even under the near-term pivot level in here. So we go back to the daily chart. It needs to at least start to clear this near-term area in here, this 5,950-ish area, and get above, ideally back above the 6,100 area to actually move into stage 2 on an equal weighted basis. But obviously the normal chart is obviously moving into potential early stage 2 there. So whether the mega caps coming off today, whether they're starting a more short-term pullback or anything or something bigger, we're not obviously as an unknown, but obviously will have an effect on what's going on with these. So, but the equal weighted chart showing some good rotation here, which we'll go into a little bit later in the video. We'll have a look through some of the industry groups and show you what's going on there. Nasdaq 100, much bigger move down today, so minus 1.75%. Again, we've got the percentage of stocks above the 20-day moving average in the Nasdaq 100 at the bottom here, sitting at 68% at the moment. So in bullish territory still. So as I said, above the 60% level generally with the 200-day moving average. So generally just with the shorter term moving averages, it's just anything in the upper zone here. So above 60% and holding above in that upper range, we tend to be in some kind of an uptrend. So we are obviously clearly in an uptrend at the moment, still holding above that. It did obviously tail off a bit during May, when it obviously was still moving higher in stage 2 here into the early part. But again, if we go to the equal weighted chart, you can see why the percentage of stocks above their 20-day moving average weren't showing quite so much, as obviously it was still struggling around its 20-day moving average on an equal weighted basis, and only just recently broke out above that. So although technically it's been in stage 2 for a while here, so through this zone here, started to move out into stage 2 with a little bit of a shakeout and carried on out. We go to a weekly chart on this, you can see that a bit more clearly. So we've been in stage 2 through this area on an equal weighted basis, but you can see we're testing a near-term pivot high area here, and it's coming back into it a little bit. So go back to the daily chart. See, this did also come off 1.1% today, so not as bad as the Nasdaq 100 itself at minus 1.75%, but still in a similar position, just holding above its 1 ATR level here, and we're sitting slightly further above the 1 ATR level in the normal Nasdaq 100. So we look at the percentage of stocks above their 200-day moving average in the Nasdaq 100. That's sitting at 70% at the moment. So we'll see exactly 70 stocks are above their 200-day moving average at the moment in the Nasdaq 100 there. So obviously in a bullish environment, holding above, you can see through this stage 2 advance area here, as I was saying. So from this point onwards through here, it's generally held above that 60% area with only a little dip back below where it came back in again. So as I said, above 60% tends to be more of a stage 2 environment. So you want to see that on the other charts as well when we look at those, and when we look for the stages. It can be very useful as a way of determining the stages without actually looking at the charts, by just looking at the percentage of stocks above their short, medium and long-term moving averages and getting a gauge of what they're doing. So we move on to the Nasdaq Composite. Similar kind of price action, a big engulfing candle today. So breaking down from the 3 days of tight action there. It's quite extended in the short term at the moment. If we go back to the Nasdaq chart itself, the Nasdaq 100 chart, you can see we've got above the 3 ATR level for multiple days there. So it's very extended in the short term. We haven't got above that level very often. The last time it did before that, it quickly reversed at the start of February coming in. So when we get above that, obviously getting out of its normal ATR range, so pulling back in. So ideally, if it's for a continuing bull, you want to see obviously tennis ball action, as Mark Minervini calls it, where it just obviously comes back in, holds its short-term moving averages and continues to grind. But a 50-day moving average test is not out of the question as well, especially with rotation going on and how extended we are in the short term in some of these. So obviously that would be a more significant pullback from the highs here, probably an 8 to 9% pullback, which is quite normal within a bullish environment. So again, with the Nasdaq Composite, if we get a pullback from today's high area back down towards the 50-day moving average there, then you've got 7 to 8% or so at the moment. So again, fairly normal range there to look for a pullback, but obviously much tighter to get back to its 21-day moving average if the strength remains. So we look at the Russell 2000 next low. This is obviously the chart that people are talking about the most at the moment. It's been popping up all over the place over the last few days. We've seen a surge in the volume coming through into the small caps and a lot of rotation, and with obviously the tech stocks taking a break and today starting to break down. We saw obviously follow through moves in the Russell 2000 stocks and as well the NYSE stocks and the S&P 500 laggard areas. So we talked about this obviously coming out on the lower time frame, breaking out of this lower structure. So again, if we drop down to the lower time frame here, so this is 2 bars a day. So we go back to the daily here, so daily chart, and then this breaks it down to a 195-minute chart, which is 2 bars per day from that daily chart. So it gives you can still do stage analysis on any kind of time frame, but you get more noise the further you go down the scales. So obviously we start with weekly, we do the stages on the weekly chart, then we drop to the daily, then we drop to some kind of intraday chart to help with the fine tuning of the entry points, etc. So you can use any that you like. My preference generally is the either 195, 2 hour, 1 hour. sometimes drop down to the 30-minute chart if it's necessary, but generally don't go too far below that, as the noise gets a lot higher when you get down to the lower levels. But for those of you swing trading, day trading, etc., then you're obviously going to be right down in those, and you can still use the same techniques on those time frames, but just be aware that you're going to get a lot more chop in the stages as such. It can be a little bit more difficult to obviously determine them at times. So always defer to the higher time frame. You want to be in line with the higher time frame. So for example, when you're in stage 2, so if the market, if you're on a weekly chart and you've broken out from a stage 1 base and you're moving out into stage 2, then your pullback entry point, as you're coming back down to here, you'll drop down to a lower time frame. So that's your weekly time frame, and then you can see it's rolling over and starting to move, and then it's starting to turn back out again, starting to base, maybe turning back up a little bit here. So this is how you determine your pullback entry, by dropping down to a lower time frame such as this, when you see obviously the pullback starting to happen, starting to flatten out, because then you can then use this lower time frame like this to then use the same techniques as you would have done on a weekly chart at the stage 2 breakout point. So on a lower time frame, which then gets you in much tighter on a pullback, which then can give you much lower risk in terms of your stop loss position. So it can be a very useful way to do pullback entries especially, but you can also use it when you're within base structures, or whenever you're, like I said, you're using lower time frame techniques such as swing trading, etc. So this one, as we said, 2 bars a day at the moment on this, so shows all 4 stages going through from 1 to 2 to 3 down to 4. So, and we've included some of the Wyckoff markup on this for those of you obviously on the service learning some of the Wyckoff method and reading some of the books. It's really useful for determining especially the stage 1 base, and when you're on a weekly chart, especially when you start to get up into the higher, you get to towards the end of a stage 2 advance, and you start to see early signs of stage 3 developing and looking for distributional characteristics. So on some of these shorter term time frames, it can come off quicker, but obviously that can be quite typical of a stage 3. Stage 3 can often be shorter than stage 1. So if you look at this, you can see we've got PS with preliminary supply, support, selling climax, automatic rally, secondary test. We've got some little bit of upthrusting in here, some further secondary testing in here, and then possible last point supports before it breaks out into a stage 2 attempt, which would be called sign of strength rally in the Wyckoff method, or the jump across the creek. So if we look at this, there's I just want to quickly show you on the Stock Charts website, they've got a good article on this done by, in part with Roman Bogum, I can never say his name, but basically Roman's an excellent teacher of the Wyckoff method and really recommends the Wyckoff analytics course on the Wyckoff method. It's really good, and goes into great depth over a course of 15 weeks, 2.5 hours a week of really deep learning to do with the Wyckoff method. And then that's just part 1, and then there's a second part to that. So reasonably expensive, but obviously give you a much deeper understanding of the Wyckoff method once you've obviously gone through the books. So as I said, you can see in here, you've got the typical, this is the Wyckoff schematic number 2. So schematic number 1 includes the spring and the test. So these are your areas where we're interested in the end of stage 1. So you can I find actually when you're looking at a stage 1 structure, so you're coming out of stage 4, you start to get that first change of behavior through here, potentially that you've got. So if you imagine there's a 30-week moving average coming through here, and then starting to flatten out, starting to turn up through this area here. So you get this first up thrust move above the change of behavior from the stage 4 decline, starts to move above that 30-week moving average, and then starts to roll over. So this is what we call stage 1A. So within phase A of the Wyckoff events, so these are the Wyckoff events and phases. So phase A, so these are the events: preliminary support, selling climax, automatic rally, secondary test, springs, tests, last points of support, backup, sign of strength rally, etc. They're what you call your events. So when you're seeing that develop through a base structure, you're seeing the price and volume action starting to show accumulation characteristics and some of the stage analysis characteristics that we look for, obviously with the change in shape of the various moving averages, the tightening up in the price action, etc. So you start to move from phase A into phase B. You're just starting to see potentially the start of stage one developing. And at that point, if it can then hold at the bottom of the structure, a little bit of an undercut maybe, or obviously higher, depending on the stock. Every obviously stock is different, might not undercut, it might. And then you start to build what we call the cores before we move into the areas that we're really interested in. So this, in terms of the actual phase C and phase D of the structure, so what we refer to as late stage one, so stage 1B in terms of if you're using Weinstein's A and B areas. So stage 1B, the later part of stage one, is phase C and phase D in the Wyckoff method. So we then have that sign of strength rally and then start to move out. So either this point here can sometimes be your stage two breakout point, or you might be on the secondary move if it has a tight move up and out with some up thrusting action and comes back in. As often you get after a big move from a spring, you can sometimes come back in to the range quite quickly. So again, currently the IWM base, the Russell 2000 base, looks more like schematic number 2, as we didn't have any spring type action. We actually formed last points of supports, and now we've had the sign of strength rally, and we're starting to move out into potential phase E here. So as you can see on this, so a little bit extended in the short term now, but if we add some volume characteristics to this, it gives you a little bit more to helps develop the picture as such. So we can use force index, which is a really useful way to visualize the volume for those that are obviously not so good at reading the actual volume bars themselves. So you can see the preliminary support here had the most volume on the downside, and then started to scale off a bit as we came into the selling climax. So in the start of the broader base structure started to develop. You could have potentially labeled this selling climax and this automatic rally. It doesn't ultimately matter too much. So you could have started the base structure from here, and this could have been an up thrust instead. But either way, it makes the same kind of point in terms of you've got this change of behavior. This was a broader change of behavior than this one. This one didn't get back above the moving average. You see, the moving average was still quite far from where this ended. So this was more of your change of behavior. So this is why I labeled this as such. So with the base structure coming through here, but you can see the force index started the supply obviously tailing off through here, and then as we broke out into the stage 2 here, you can see that obviously the up volume are overpowering, as well as the strength of the price bars, which force index illustrates on here. So it can be a really good way to visualize that, because you're looking for a strong volume on the breakout. So if you get this, and then at the breakout point here, you actually got you had a little weak bit like that, and it was making a negative divergence as it was attempted to move here, then that would give you a very different signal to what we're seeing here with this huge volume. So showing obviously a huge amount of strength in the near term. Right. So if we go back to the daily chart quickly on this, I just wanted to show that we're obviously in this resistance line. We're now testing the stage 2 level once more. So we did have this failed stage 2 move, which turned into an up thrust and a test before rolling back into the range. So we've actually got above a couple of the significant bars through here, but not all of it at the moment. So if we drop to the weekly on this, we're not completely clear of this weekly significant bar at the moment, so we're still within that zone. So this 190 level remains key at the moment here. So although technically we're testing the stage 2 level again, this area of resistance is very much in the near term. So I would say that's significant, and hence even if it did close the week slightly above this in this area here and was technically moving into stage 2 again, it would still be wary in terms of until it can get above the top of this bar here. This 190 level for me is more significant at the moment on this. So we need to follow through and start to get back up above here. But as I said, a little bit short-term extended here at the moment. So it may need to consolidate for a little bit within this range. So ideally we can get some consolidation and then some follow through, then that will give the moving averages a bit of chance to catch up.